Hello there, and this session today is all about money. And we're going to be talking with Sarah Steele of betterwithmoney.com, and Sarah's going to take us through some of the things to think about regarding your finances when you've been made redundant. So welcome, Sarah.
Hi, how are you?
Yeah, good, thank you. Nice to have you here.
Thank you.
So before we get stuck in, do you want to tell us a little bit about yourself?
Yeah, absolutely. Thanks, Paula. Well, I'm Sarah Steele and I'm the owner of Better With Money. Now, Better With Money was set up really to provide financial education to people to help them to understand their finances, so that we can all be inspired to take action and reduce money stress. Because, as we're well aware, money worries can really cause mental health and relationship issues. So the more we can do to help people to take control of finances, the better. So that's the aim of what we do. It's really just to make money simple and to give people little tips as to how to move forward with their life.
Great. Yeah, it must be really, really empowering for people. So, okay, let's get stuck in. So you've been made redundant. I mean, obviously, one of the first things that's going to be on people's mind is money. How much do I need? Is my family going to be struggling? So what are the first things that people should be thinking about?
Yeah, when your role is made redundant, it does cause those money worries. And I think the first step really is to think about, can I plan financially so that I start to feel in control, and really understand what it is I need to pay for on a day-to-day basis, just for my basic living costs, until such time as I've got other income coming in. So I think, the first thing really is to take that step back and get to grips with what your budget is. So that's really working out what you've got coming in, what bills you've got to pay for. And it may well be as part of that you've worked for your employer for more than 2 years and you're entitled to redundancy pay to compensate you for the loss of your income. So you can really add that to the list of the money coming in. So how do we budget? That's always the first question. Well, there's loads of online tools available to help you to do this. We do have some on the Better With Money website. We've got budget planners that you can print off and complete and stick on your fridge, but we've also got interactive ones too. But when I do budgeting, I really like to think about my money in 3 chunks, really. Firstly, what is your essential spending? That's the things like the rent, the mortgage, the bills, the food shopping, things that you absolutely have to buy to live day to day, because that's the really important bit. But then we need to look at things like, have we got any debt repayments that we need to pay back? Have we got loan repayments, car finance, phone finance, things like that? We put that into sort of the second bucket. And then thirdly, it's that fun stuff. How much on average do you think you spend in the month on takeaways, going out with friends? I heard a statistic the other day that in the UK, we spend £80 a month on takeaways per person, which I think is astounding. So, if you're looking at places where you might need to cut costs, I guess that could be the first place to start. But, once you've been honest with yourself, used a budget planner and written down all of those things, you're then going to have a much clearer idea of what you're going to need each month to see you through, and whether you've got enough money to cover what you need, or whether you've got a shortfall and you need to start making another plan. So that's number 1, definitely budget and work out what's coming in and out.
Yeah. So a little question here. So if somebody's in a partnership and, they're going through all this with their partner, any tips on managing that? Because sometimes, that can be quite difficult. Emotions are high.
Yeah, it is difficult. And I think, one of the biggest issues of stress is money secrets, actually. I think there was a stat that came out as part of National Talk Money Week that in the UK we keep 20 million money secrets from our partners, and 50% of them are hiding things like credit cards, loans, debts, things like that. We, for some reason, as a nation, we're known to have a bit of a stiff upper lip about money, but all that does is compound the stress that can be happening at the time. So if you can find a way to sit down and do that budgeting process process together and look at what you've both got coming in, what you've both got going out, so that you can work those finances together, it will make it a bit easier going forward. So I mean, that would be my main recommendation, Paula, is to be open if you can.
Yeah.
You know, there are lots of places and charities out there that can help you to do this type of budgeting. But you know, I'll talk through those at the end actually, and then I can send over a list of those too.
Yeah, yeah. So, okay, so you've done your budget, you've worked out, you know, what it is coming in. So what happens if there's a shortfall? What if there's not enough?
Yeah, you know, and inevitably that is going to be the situation for a lot of people. I think the first port of call really would be to look at the state benefits that you might be entitled to. Now, the main benefit if you're not working and you're looking for another job is the New Style Job Seekers Allowance, or JSA as it's now known. To qualify for that one, you must be under state pension age and actively seeking work. Now, you normally will be able to claim that if you've been paying national insurance contributions for the last 2 years as an employee. And Job Seekers Allowance isn't affected by any household savings that you have, although it might be reduced if you do some other work or got some earnings, something like that. So that's the first one, is Job Seekers Allowance. The other benefit that you might be entitled to if you've got a low income or no income, and that is universal credit. Now, this is for people who have either been employed or self-employed before and are out of work or on a low income. And again, you need to be under state pension age. Now, the standard allowance for universal credit is just over £400 a month at the moment, but you could get more than that if you've got children or you care for somebody like a disabled person in the house. You might also get housing allowance on top to go towards things like rents or mortgages. But your universal credit is based on household income, which is why it's so important to talk to your partner about what they've got. So if you live with someone as a couple, their income could affect how much you get. Now, you know, you think, well, okay, that's good, but how do I know if I'm eligible for these without going through a long application process? I think the first thing to do, there's a few benefit calculators out there where you can put in your details and it will tell you, based on the information you give it, whether they think that you'll be eligible for state benefits. And two of these that I can think of that are great are on the Entitled To website and also the Turn To Us website. So if you go on there, fill that out. If at the end of that process, those questionnaires normally take about 10 minutes to complete. If you believe you're eligible, then you can go onto the gov.uk website and apply for those benefits. And the upside actually of getting benefits when you're not working is it means that you're going to get national insurance credits, which is essentially helps to keep you building your entitlement for things like the state pension while you're not paying national insurance. And the other thing I was just going to mention, you know, if you've got a shortfall and if you are entitled to universal credit, is that you may be able to contact your local council and they might agree to reducing your council tax bill for you. And you can find more details on that at the gov.uk website. If you just search for council tax reduction, it will all come out. So there are a few options there, but state benefits would certainly be the first place that I would look if you've got that shortfall. And of course, the other thing would be to look at, you know, am I spending more money on takeaways than I need to? Do we actually need to buy as many Christmas presents or birthday presents as we normally would? Could we reduce the money down? You know, just looking at those little areas where you think you've probably got an overspend.
Yeah. And what about the mortgage holidays? Because they're in the news quite a lot. What's your opinion on those?
Yeah, I know. And so the mortgage payment holidays have really been put in place to help people who are struggling financially during the coronavirus. But of course, you know, if you end up losing your role because of that, that option's available to you too. Personally, you know, I think it's a very good option if you really need to do it. So if you take a mortgage payment holiday, you've got actually until the 31st of January 2021 now to go onto your mortgage lender's website. They'll have the information on there and you can click to have that mortgage payment holiday. If it's approved, then you'll get 3 months that you don't need to pay your mortgage for. But the only thing you need to be aware of is that during that 3 months that you're not paying your mortgage the interest will still increase. So when you actually start repaying again, what you might find is that your mortgage payment is slightly higher to cover that break that you've had. But do you know what, if it's a difference between, you know, being able to survive day to day for the next 3 months and not, then I think it's a really good option if you don't have other options available to you. And the great thing about doing it before the end of January is that it isn't going to affect your credit history file. You know, the government have confirmed that you can do that without it affecting negatively your ability to get credit in future. Yeah, thank you for mentioning that. I think that's a great option.
Yeah, it might just be enough to give you that breathing space to get
exactly.
Yeah. So what about those people who perhaps were already in debt when they're made redundant, and now they're faced with not even being able to pay off those debts?
Yeah, you know, if you are struggling to make ends meet and you're falling into debt, you know, please don't think that you're alone. There are some, you know, as I mentioned before, there's some really fabulous charities out there who've got the people and the skills to help you. These include places like the National Debt Line, Citizens Advice Bureau, Step Change, Christians Against Poverty. There's a really great list of them. So if you look on their websites, send them a message, give them a call. They will help you for free, and they will say how you can consolidate your debt. They'll help you to get repayment plans in with the people that you owe money to. They're fabulous.
Yeah. I think what I'm hearing from all this is that the help is out there. So I know money worries can be very disturbing for some people. You know, ask for help. You know, approach the mortgage people, the benefits officers. You know, the charities that help you with debts.
Absolutely. Don't do it alone.
Yeah. And even a good friend that you know is good with money, if you can't do the budgeting.
I agree with that, you know, and it's all part of opening up. It doesn't have to be, you know, if you don't feel comfortable talking to your closest family because you know they're being affected by your finance issues, then yes, if you've got a friend that's a good listener, maybe understands these things, you know, you don't have to go to expensive financial advisors to get this sorted. There are other things available.
Something that we haven't discussed here are pensions. So obviously when you stop work, you will stop paying into a pension. What happens with them? They're just put on hold?
Yeah, so just the same as if you were leaving voluntarily. There's a few things you can do with your pension. I mean, first of all, your employer will stop paying into that pension for you, and obviously they'll stop taking contributions. So what will happen is, in effect, you will become a deferred member of that pension plan. After you leave, you should then get a letter through the post to say, this is the pension that you accrued during the time that you work for us, and these are now your options. Generally, your options will be do nothing at all, just leave the money where it is. It will continue to be invested with that pension plan until such time as you wish to take the money when you get to retirement age. Sometimes you do have the ability that you can sort of, in effect, pick that money up and transfer it to a new pension plan. Let's say, for example, you joined a new employer and you wanted to consolidate the two. You just need to be a little bit careful about that in terms of making sure that you're not paying higher charges on the new one rather than the old one, that the investment funds are performing as well on the new one as the old one. So, I mean, that is really an area where actually a bit of advice is a good thing to do. There are some pension schemes as well that some employers have nowadays where even after you've left, the pension's in your own name, so you can continue to pay into them. So say, for example, you decided, right, my role's been made redundant, I'm going to have a change of life, I'm going to set up my own business or work for myself now. Rather than set yourself up a new pension, you might be able to pay into the one you've already got. So yeah, lots of options, but the main thing is you will get a letter outlining your options once you've left the company.
Okay. And of course, as you said, if you are signing up for benefits or whatever, then at least your state pension is getting paid too.
Exactly, yes, because when we pay our national insurance contributions when we work or if we're self-employed, and part of that does go towards our state benefit entitlement. And that's a really great start actually to our retirement income. If we have a full national insurance history, it can be worth just under £10,000 a year to us in today's terms. That's a great start, isn't it, to your income in retirement. So well worth getting those credits and getting those benefits if you need them.
Definitely. Okay, so we've talked a lot about budgeting, about various things that we can do. So how about just general day-to-day money saving tips? I know I spoke to a chef on one of our other interviews who was saying things like, well, get together with your family and buy big bags of rice in bulk, and spread the cost and so on. So any sort of like day-to-day tips like that can be really
helpful. I love that one, by the way, the buying it all together. Well, let me start on food then, seeing as you've just mentioned that. First of all, make full advantage of all the vouchers out there. I mean, if you shop at Tesco, you get the club card vouchers and things like that. But if you look on sites like My Voucher Codes or Money Saving Expert, they do have all the latest vouchers for all the supermarkets and on all the deals. So, that's the first place to look. But there's also a couple of apps that I've discovered recently where you can find reduced or free food in your area. The first one is Olio. And that's the one where if anybody's got free food, so let's say somebody's got an allotment and got an abundance of potatoes or tomatoes, or you've got the supermarkets like Tesco's who they've got food that's coming up to the sell-by date, you can go onto the Olio app. You can either advertise food yourself to give to other people for free and you arrange for them to pick it up, or you can go on and look to see what's in your area that you can go and pick up. So that's the first one. Olio is a great app. The other one is Too Good To Go. And I mean, in my area, we've got a few pizza restaurants, Morrison's, Costa Coffee and M&S that use it actually as well. And that's where people just put on food that they can't keep overnight. So if you can go and pick it up at 5 p.m, then you can have it at a much reduced price. So for example, the pizza place is normally £10 and you get a pizza for £3 at the end of the day. Morrison's do fruit and veg bags. I mean, it's sort of potluck what you get in there, but for £3 you get a really good bag of fruit and veg. So yeah, try and take advantage of those sorts of things that are out there. I mean, the other thing
with greengrocers and so on, at the end of the day, in that market greengrocers, they often get rid of their stock, don't they? You get big bundles for £1 or something. So
exactly. Yeah, actually that's a good point. Shopping 2 hours before a store closes is the best time to go and get all of those bargains, because if you can buy that meat and then just put it in the freezer or whatever it is, then it's no worse, is it? It's a really good time to shop. And I do find shopping online personally stops me from spending too much money, because I can put a food plan in place. I get to know what I want for the week. And then I'm not walking around the shop browsing going, oh, I'll just have that and I'll just have that. I know for other people, when they shop on apps, they spend more time browsing. So I have got friends that have said, actually, I spend more when I do it that way. But, that's work out what works for you. The other thing I would say on money saving is I know that a lot of us don't like doing this, but look at things like your utility bills and your insurance. And if you have got time, try and shop around, because the average family can actually save up to £200 a year by shopping around. And nowadays it's made a little bit easier, because if you don't know where to start or you don't want to do it yourself, there are companies like Look After My Bills, where you sign up and they will do it all for you free of charge, because they earn their money through advertising and things. So there's people that know what they're doing and can do it for you. So yeah.
Brilliant. Wow. I'm noting these things down as I go.
Yeah, and what's lovely about when we do this financial education is that we often get people suggesting their tips as well. Some of those apps is because people have come back in sessions and gone, oh, I use this and I use that. So actually talk to friends and family about what they do to reduce money as well. There's lots of, you know, if you do find yourself maybe with some extra time, and maybe you want to retrain in something, during coronavirus, the Open University have actually opened up a lot of their online courses and made them free. There's lots on there from sort of IT skills, Excel, things like that, marketing courses. And there's also one that was launched, I think it was back in May, which is called Academy. And that's all about helping with your personal finances and how to budget and how to get yourself better with money so that you feel less money stressed. So I'd obviously definitely recommend that one.
Yeah, that sounds a really good one. And just going back to savings and tips, I think another one of mine is, if your insurance is up, don't automatically renew. I know my homes and contents was up a couple of weeks ago, and I think it had gone up by about £120. So
yeah, it's
to do a
unbelievable.
the meerkat and get a
Yeah, it really is unbelievable. And there's been some research to say that the best time to renew your insurance is 3 weeks before your renewal date. Because if you do it too close to your renewal date, the insurers know that you've got to get it done. And therefore, you know, they can push the price up. The further out you do it, they know that you've got time to shop around and you're likely to get the better price. I mean, it is cheeky, and I have seen that there's a consultation out at the moment, because I always find it difficult, you know, loyalty nowadays doesn't get rewarded. If you stay with an insurance company, you're not getting as good a deal as somebody who's search the market and coming in this year. But I know there's some consultation out to see if they can change that, to make sure that insurers have to offer existing customers the same as new customers. So watch this space for that one, but I'll be welcoming that one with open arms.
Yeah, I mean, I think that sounds ethically much fairer as well. You know, your existing customers. Yeah,
absolutely. Yeah, and you know, it must be better to keep customers rather than have to keep going out and finding new ones from their perspective as well, I'd have thought.
Yeah, yeah. And the other thing, I suppose, another tip is, so I have my broadband and phone with EE, and also my so I have my landline with EE and also my mobile. And because I have those three things, I get a discount. So it's
putting things together can often help. I mean, that's reminded me of a story during lockdown, and when there wasn't as much sport on the television. I realised my Sky bill was just gone through the roof, and I said, right, I've had enough of this, and we don't need Sky Sports. There's nothing on anyway. And I phoned them up to say, right, I'd like to cancel this, that, and the other. And by the end of the phone call, not only had I kept all the services that I already had, but I'd also added Sky Broadband, and I'd worked out that I could get Netflix for half price through Sky. And so I ended up with all these additional services and was paying £20 less a month. So I do think it's just a good tip, you know, even if you think you've got the best price, I mean, particularly Sky, phone them up every year and try and get a better price. It's just about taking that time, isn't it? But I do think, you know, when you're looking at that budgeting process, almost systematically working through all of those fixed costs is great. One more tip, actually, while we're on the subject, is I do look once or twice a year at my standing orders or direct debits that are coming out from my bank account. I invariably find something and I think, what is that? That I you know, and it might have been a magazine subscription that I did a year ago, and actually every time it comes through the door I put it pretty much straight in the bin. Or it might be that I had a guarantee on a fridge, or you know, so have a look at those, make sure there aren't things going out that you no longer need to pay for and you're not using. Gym memberships would be an example, when we're allowed back in gyms.
Yeah, no, that's a good one. And I did that recently, actually. Yeah. Excellent. Okay, so anything else that you think you'd like our listeners to know, or any other resources up your sleeve?
Yeah, I mean, maybe just a couple of things. One is, obviously, when you're working, you do get some protection through your employer, things like life cover, possibly health cover. So if you're no longer working for that employer, just have a little look to see if there's any insurances that you now need to provide for yourself because you're not getting them through an employer. I mean, if you're going to a new role, you might well find that you get the cover there, but that's definitely something to look out for. And I think more than anything, you know, when it comes to redundancy, it's just really important for your well-being to acknowledge that it is the role that's redundant.
Yes.
It's not about you. Particularly at the moment, we've got 1 in 4 employers making redundancies because they've been forced into that position by the coronavirus pandemic and what that's doing to their finances. So it's not about your ability to do the job, it's the role that's being made redundant. And I think if you say that to yourself and use that terminology, hopefully it will have a positive impact on your confidence. And I guess just to say, you know, anything you do around finances during that time will set you in good stead for the rest of your life, because I think changing your money habits ever so slightly, just doing a little thing extra every day can really make a big difference to how we live financially.
Yeah, I agree. And actually, now that you've brought it back to actually being made redundant, it reminds me of a question which I haven't asked. So if you're made redundant and you have a lump sum, what you know, should you be, you've mentioned about adding that into your budget, but should you be investing that? New business? I mean, what's a wise thing to do with it?
Yeah, I think it's a wide. Well, I mean, first of all, you know, if you need that lump sum to tide you over to pay your living expenses, then that's absolutely what you should do. If you do think you're going to have a little bit left over, then using it to clear any debts to bring your spending down to a manageable level is definitely something to look at, particularly whilst now at the moment the savings interest rates are so low. I mean, in a best case scenario on an easy access type account, it's just under 1%. So you're not really getting any interest. So if you have got debts, use it to clear that. If you haven't got debts, you know, if you're in the fortunate position that you don't need it to live for the next few months, your debts are clear, then maybe you might want to save that. There's a few options. Obviously, you've got those easy access accounts. But if you can afford to save your money for a little bit longer, let's say 3 to 5 years, then you might want to look at an ISA. That allows you to save up to £20,000 a year. You can invest it in cash or stocks and shares. And the advantage of an ISA is that you're not paying any tax on interest or growth, and you can get your money out tax-free as well. And it's quite flexible. You can get it out when you need it. Also, if you're aged between 18 and 39 and you're still saving for your first home, then please don't forget the lifetime ISA. This is where the government give you a 25% boost on any savings you make up to £4,000 a year, just to help you get on that housing ladder more quickly. But if you've got money and you think, actually, I'm not going to need it in the next 3 to 5 years, and you can afford to invest it for the longer term, then it is still the most tax efficient way of saving to put it into pensions, to boost that retirement income for you. But you just need to remember, if you're going to put money into pensions, you can't get it out until you're at least 55 years old. And the government's actually looking to increase that age to 57 come 2028. But it's, you know, it's a great thing to do if you've got some spare cash. And lastly, I know you just mentioned it, you know, you could use it to retrain, start your own business. About 1 in 6 people in the UK earn their living through being self-employed or having their own business. And there's, you know, every time they do research, lots of people have aspirations to do that. I mean, personally, I made the leap myself. I was employed for 25 years and then I went on to having my own business. You know, and I find the advantages that you can work your own hours that suit you, you can fit it around your family. But the harder things are, you're not guaranteed an income, you know, and you're not getting those lovely employee benefits and people aren't paying into pensions for you. It sort of all sits on you. And there's definitely some extra skills to master, like, you know, how do I do all the accounting and invoicing and those sorts of things. But, you know, it's a great place to think about if you've got that money and you want to take your life off in a slightly different direction, almost taking the positive out of what could be a bad situation.
Yeah, and I know there are plenty of people out there who've always hankered after starting their own business or going freelance or consulting.
Yeah, absolutely. You know, it's
for them.
a brave move, but you know, is there a better time if you've got a bit of time to do it and you've got a bit of money behind you?
Yeah, I know I started my very first business in a recession, and actually, you know, if you can get a business running in a recession, then you can do it anytime. Yeah.
Absolutely. Yeah. And I think that's it, you know, over the pandemic, it's really shown those people who can be resourceful, have innovative ideas. You know, the businesses that are going to succeed out of this are the ones that are being flexible and where people have got a real passion for what they do, because I think it's that passion that drives you through, isn't it? So
Yes.
yeah.
Yeah, definitely. Well, brilliant. That's been really interesting and helpful. So we'll put Sarah's details underneath with a link through to her website, where, as she mentioned, she's got lots of resources as well, and those budgeting tools and so on. So thank you very much.
Thank you, Paula. It's been a pleasure.